Well, obviously, a major consideration when you're financing a vehicle is the actual finance agreement itself. It's really critical to understanding what you're purchasing, what you're paying. So really, you really want to focus in on and do your best to understand that agreement so that you can make the best informed decision you can for yourself. Okay, so obviously, when you're considering your financing options, I'd really key in on sort of 5 major steps that you want to consider. Step 1 is you want to really understand what your options are. So there's lots of different financing options, whether you're going to go to your local bank and review your financing options there. Obviously, there are options at dealerships themselves, most of which will offer you some sort of financing option. It's really important to consider everything when you're shopping and before you even begin, because you want to understand what interest rates are available to you, things like that. So you can really want to use that to sort of make yourself an informed decision on what options are the best for you, whether that's doing financing at the dealership or going through your own sources of financing. The second step you want to consider is actually your loan term. It's really important because the term of your loan or the length of your loan really has a big impact on what you're going to be paying as far as your monthly payment. When you consider a longer term loan, it's going to be smaller monthly payments, but the fact is you're going to pay more interest over that period of time. Whereas a shorter term loan will mean less interest paid overall, but maybe a higher monthly payment. And again, it's important to also consider things like any sort of repairs or reconditioning that you might want to make down the line. So if you're in an 8-year loan, you may be doing some pretty significant repairs to the vehicle, as opposed to a shorter term loan leaves you freed up to maybe make those repairs more affordable down the road. So step 3, I'm going to suggest is a really critical point, because you want to now consider things like your interest rate and fees that you're paying, as well as the length of your loan or your loan term. And that's going to allow you to get an overall cost picture of what that vehicle's going to end up costing you in the end. This is a really critical step, because by combining all these things, you're not just looking at what the monthly payment affordability is, you're looking at the long-term affordability of what that vehicle looks like in the big picture. So step 4, I'm going to suggest that there's a component here that you really want to start early on, which is understanding your credit score. Understanding your credit score will give you an idea of the type of financing that may be available to you. So the better your credit, the better the offers in terms of financing will likely be. That'll sort of translate into smaller interest and give you sort of more options, generally speaking, the better that your credit is. If your credit is if you're new to credit and haven't had a lot of credit before, then that may also mean that you don't qualify for things like prime interest rates, but you may have to look at sort of higher interest rates and things like that. So understanding your credit score is really an important, critical component before you even get started. And then as you get into the process of actually looking at your financing options, whether you're sitting down with your bank or the car dealership or whatever, you want to make sure you understand who your credit's being shopped to. So for instance, a car dealership may have several different options for financing. So you want to ask them, who do they use, and who will they share your information with in order to help you secure financing. So these are all important things to consider when you're looking at financing a vehicle, both before you get started and while you're in the process. So in step 5, you want to make sure that you really understand the agreement. You've asked all the questions that you needed to ask in order to really get a good understanding of it. This will include things like penalties for early or late payments, and you really want to get a good handle on the agreement finally before you put your signature to the paper. So again, just to sum up, it's important to do your research before you get involved in any type of financing. You really want to secure the type of financing that suits you best. You want to consider things like interest rates as well as your loan term, as well as your monthly payment. And remember, the longer your term is, the more interest you're going to pay. So sometimes it may make more sense to go for a shorter or medium-term loan in the long run. And finally, you want to make sure, as you go through that agreement one last time before you put your signature on paper, you want to make sure you understand all the terms, all the conditions. You want to make sure that anything that was promised to you is in that agreement, and if it isn't, that's the time to have the discussion, because if you signed it, it's too late to kind of go backwards. So again, just make sure you understand what's in your agreement, that you're comfortable with it, and it fits your budget.